Very good morning, everyone. Hope you all must be doing great. Actually, I was going through the revisionary test paper, which is issued by ICAI for September 2024 examinations. And I found one case study quite interesting. Actually, it is covering two important sections of PGBP. One is 44AB, that is related to tax audit, right? And the other section, which is covered over here, is in this case study is 44AD, one of the presumptive income section. We understand that there are other presumptive income sections also in PGBP. One is 44AD, other is for professionals 44ADA, and the third one is for the people who are engaged in plying, hiring or leasing of goods transport vehicle, that is 44AE. So these are some of the presumptive income section, but as of now in this case study we will be dealing with 44AD. Okay, let me give you a quick recap of these two sections and then I'll come to the case study. Okay, first 44AB. See, just listen to it, no need to write anything. You all know what is 44AB. It is just for a quick recap. Section 44AB, quite an important section. It deals with tax audit. So first of all, who are required to get their accounts audited? So this section says that please tell us whether you are running a business or you are into a profession. If you are into a profession, then we will say that if the turnover, actually the criteria for tax audit is just the turnover. If the turnover exceeds a specified amount, boss, you are required to get the accounts audited. Correct? And by who? By a practicing chartered accountant. Okay. So for if you are carrying a profession, this section says that if the turnover of the previous year is exceeding 50 lakh rupees, it is more than 50 lakh rupees, then you are required to get your accounts audited. Good enough? Okay. So this is for profession, simple. For business also it's easy. Business, it says if your turnover during the previous year is, they have doubled the amount, 100 lakh, that is 1 crore rupees. So as of now, I am writing for the business. Okay. So it says, boss, if you are running a business, assessee is running a business, then they will say that your turnover during the previous year, which what is the previous year for our September 2024 examinations? This is previous year 23-24. So this previous year. If your turnover of business exceeds rupees 1 crore, it is rupees 1 crore, then you are required to get your accounts audited. Exact 1 crore, no requirement, but if it is more than 1 crore, go and get your accounts audited. Got it? Okay. But they say that if you satisfy certain conditions, then we will give you a relaxation. We will give you a relaxation. If you satisfy, in case you satisfy a certain condition, we are going to give you a relaxation. And then in that case, up to 10 crores, even if your turnover is up to this limit of 10 crore, you are not required to get the accounts audited. So it is a good deal, in fact, right? Because after 1 crore, assessee is required to get the accounts audited. But now they say that we are giving you a very small condition which you can fulfill very easily. And if you fulfill this condition, we will say that up to 10 crore, you are not required to get the accounts audited. Okay. But for this, to avail this facility of 10 crore, you have to fulfill a condition. What is that? It says that basically your transactions during the year, all your transaction, whatever the receipts which you are getting, whatever the amount you are paying, it should be through banking mode. See how clever our government is. So government has said, income tax law is saying that if your majorly transactions are through banking mode, then up to 10 crore, you are not required to get the accounts audited. See why? Because if majorly your transactions are in banking mode, through banking mode, then there would be very less chances of manipulation. So we don't require audit in that case. It says majorly your transaction should be through banking mode. Although cash is allowed, but to a very, very limited extent, just 5%. Right. So I can write like this, that if your transactions, the condition is that whatever the transaction which is happening during the year, we are allowing only cash transactions up to 5% of your total transactions. The total transaction which you are making, we limit your cash transaction just up to 5%. Up to 5% we are okay with it. But if it is more than 5%, then sorry, we will not give you this 10 crore benefit. You will come under 1 crore limit. Correct? Enough. Actually, what are transactions? Transactions is nothing. You can just understand in this way. Whatever the receipts you get or whatever the payments you make, that is nothing but transactions of the year, right? So whatever is the receipts during the year or the payments which you make, let me write it neatly. The payments you make, these are nothing but transactions. These, please limit all your receipts. Limit all your receipts to 5% if they are coming in cash. Cash transaction should be limited to 5%. All your receipts just limit to 5%. All your payments limit the cash transactions up to 5%. Right? So what I can do is, whatever I can make a small formula, even it is not required that you should learn this formula, but you can make it of your own. So whatever is your total transactions, whatever is your total receipts, out of this total receipts, your cash receipts, if you calculate the percentage of it, or I can say simply into 100, it should not be more than 5%. Similarly, whatever is your cash payments, or I can first write whatever is your total payments during the year, out of it, the cash payments, are you all getting this? Should not be more than 5. Up to 5% we are okay with it. So if you satisfied both these conditions of 5% for receipts also and for payments also, right? Not just one, both the conditions. So if you restrict your cash transactions up to 5%, go and enjoy this 10 crore limit. If this is not satisfied, if it is, let's say, receipts is more than 5%, or let's say payment is more than 5%, or both are more than 5%, then you will be given 1 crore limit only. Correct? Right. One last thing which you should remember, these receipts or these payments can be your revenue receipts also. It can be your capital receipts also. So you have to take, when I am saying total receipts or when I am referring to total payments, it includes both revenue receipts or capital receipts. Now you can ask me, sir, what is revenue receipt and what is capital receipt? How we will differentiate it? See, I'll give you an example. Let's say this is Mr. X. He is running his business. X is running his business. Actually, he is a manufacturer of clothes. Right? He purchases raw material and then he manufactures clothes. So whenever he is selling the clothes, and he is getting some receipts, what type of receipt is it? Revenue receipts. It's day-to-day nature, right? Whatever the raw material he is purchasing, he is making the payment. What type of payment it is? Revenue nature, right? But let's say in this business, he has some machines also. Which he uses to manufacture the cloth. If he is purchasing these machines or he is selling these machines, what type of payment or receipts it is? Actually, it is capital receipt, because this is not a recurring nature of the business. Because cloth is something which is stock in trade. He is dealing in this business. That is of revenue nature. But if he is selling the assets of the business other than stock, right? So if he is selling the machines by which he is using in manufacturing clothes, so whenever he is selling, this is nothing but a receipt. And what type of receipt it is? Capital receipt. If he is purchasing these machines, he is making a payment. What type of payment it is? Capital payment, right? Okay, come back. So this 44AB, it says that assessee, you can enjoy the limit of 10 crore provided your total cash transactions, that includes your revenue and as well as capital, you should restrict up to 5% only. That's it. So this is in summary section 44A. Correct? Although it's not exactly a summary, I have given you a detailed explanation with example. Okay. Now come to section 44AD, presumptive income section. Okay. It says that assessee, if your turnover, you would be eligible if your turnover is up to 2 crore during the previous year. If it is more than 2 crore, then you are not eligible. Although there is an amendment, there is something regarding 3 crore. I am coming to that point, right? But as of now, first, let me explain regarding 2 crores. So 44 AD says that if assessee your turnover is up to 2 crore, then we can give you a option scheme that you can compute your income on presumptive basis. And how you're going to compute your income? See, whatever is your turnover divided into 2 parts. Whatever is your turnover divided into 2 parts. First of all, tell me how much you have received through banking mode. Banking mode, you understand that how much you have received through account pay check, account pay demand draft, RTGS, NEFT, UPI, etc. Approved banking mode. So whatever, just divide your turnover into 2 parts. First of all, tell me that how much you have received through banking mode up to the due date of ROI. I'm again repeating, how much you have received through banking mode up to the due date of ROI. So on this amount, you can take 6%. You can take 6%. This is the minimum percentage. It is your option. If you would like to take it more, then you can take it, but not less than 6%. So on this turnover, on this part of the turnover, 6% would be your presumptive income. Okay. So let's say 1.5 crore is the amount which you have received through banking mode up to the due date of ROI. This is important. Up to the due date of ROI. Okay, this is very important. It should be banking mode also, and you should have received this amount up to the due date of ROI. Then on this turnover, we will presume minimum 6% your presumptive income of PGBP. And on the remaining now you can easily calculate how much is you can just calculate the balancing figure. So remaining would be 0.5 crores, or I can say 50 lakh. On this amount, the minimum percentage is 8%. So calculate 6% on 1.5 crore, whatever the amount comes. Calculate 8% of 50 lakh, whatever the amount is there. This is your presumptive income. This is the PGBP income. This was 44 AD. Now there is a little amendment also in this section. This section now giving us a benefit. 2 crore is still there. Now this section scope is now a bit extended. It says now we can also give you a limit of 3 crore. Initially it was just 2 crores. If it is more than 2 crore, 44 AD was not for you. But now they have given a limit, a benefit of 3 crore. But again, they have given this benefit with a condition. And what was the condition? Very much similar to what we have just done. It says that if your turnover, we can give 3 crore to you, but out of your turnover, your cash turnover should not be more than 5%. Out of your turnover, your cash turnover should not be more than 5%. In other words, I can write like this, that out of your total turnover, your cash turnover should not be, if I am just calculating the percentage into 100, it should not be, it can be up to 5%, but it should not be more than 5%. So if it is not more than 5%, you can enjoy this limit of 3 crore. Otherwise, we are going to give you a limit of 2 crores. Got it? And again, everything would be the same. Even if this person satisfies this particular condition, then he or she, the assessee, can enjoy 3 crore limit. And out of which, we will see that how much you have received up to the due date of ROI through banking mode. On that, we can compute 6%. And on the remaining, we will compute 8%. So this is 44 AD in nutshell. Right? So what is the difference here? Here also we were calculating 5%. Here also we were calculating 5%. What is the basic difference over here? See, in 44 AD, we were just concerned with turnover. That is only receipts. Turnover is nothing but receipt, right? Turnover is our sales, gross receipts. So it is just receipt. So in 44 AB, we were concerned not with just the receipts. We were concerned with the payments also. But here we are just concerned with the receipts. Second difference is that here we are concerned with both type of receipts and payment, whether it was on revenue grounds, whether it was on capital grounds, right? But here we are just concerned, 44 AD, we are just concerned with turnover. Turnover, we can say only revenue income, not capital income. Got it? So with this knowledge, with this revision recap, let's come to your case scenario. Naveen, age 40 years, is engaged in the manufacturing business, so he's into business. See, this is not the way to read the case scenario. If you have already seen some of my videos earlier of mock test paper or other practice sessions, I always say that read the questions first and then come to the case study, so that it will also save your time, right? So first, let me read out the questions first. Okay, on the basis of the facts, let me do it this way. Okay, on the basis of the facts given above, choose the most appropriate answer to question number 1 to question number 5. Okay, so we have 5 questions in this case study. First question says, is Mr. Naveen eligible to declare income on presumptive basis? They are asking whether this guy is eligible for 44AD or not. On presumptive basis under the provision of Income Tax Act. So we got the idea what the question number 1 is asking, whether the assessee is eligible for 44AD or not. So we will see what are the conditions, whether he is eligible, what is the turnover. We will see that in the case study. Okay. We are just reading, we are just giving a glimpse to all the questions so that we can have a rough idea of the questions. Question number 2. What would be your answer to MCQ 1? Okay, they are again asking the same question. In fact, now they would be giving some additional information. Assuming for purpose of answering this MCQ and MCQ 3, okay, that Mr. Naveen has additionally received 10 lakh by way of cross check out of turnover during the previous year 23-24. Actually, what the question is asking, first of all, we understand cross check is as good as cash, right? It is not account pay check, it is cross check, bearer check, cash. It is all as good as cash. So this question, what we have to do is we have to give the same answer here. The question is same actually. The question number 2 is also asking whether the person is eligible for 44AD or not. But they have given us an extra information that they are now saying that this person has received 10 lakh rupees more, whatever was given in the case scenario that we will read. Now they are saying that if this person would have received 10 lakh rupees more in cash, then what would be your answer? So we will see the case study. Now we got an idea that second question is also asking about the same thing, but yes, they have a little tweaked the question. They have just changed the question. They have just given changed one information. They are saying now 10 lakh rupees has been received extra in cash. Okay, and this for this MCQ 2 also, this MCQ also, and for MCQ 3 we have to take that 10 lakh rupees is the additional amount which is received. Not for question number 4, not for question number 5, not for question number 1. This extra information of 10 lakh we have to apply only in question number 2 and question number 3. Got it? Okay. Let me read out the question number 3 also now. Is Mr. Naveen required to get his books of accounts audited under section during the previous year 23-24? That is section 44AB. We have to see whether this person is required to get the accounts audited or not. See, first of all, we will see whether 1 crore limit would apply here or 10 crore limit will apply here, and then we will answer accordingly whether this person is liable or he is not liable. Okay. Fourth question. What is the amount of profit and gains of business? Okay, they are asking about the PGBP income chargeable to tax in the hands of Naveen as per the books of accounts. So they are saying as per the normal provision, not as per the presumptive provision. They are saying what would be the PGBP income of the assessee as per normal provisions. Okay, here they are asking nothing but normal PGBP income. Okay, and the last question is, what is the amount of profit and gains of business chargeable to tax in the hands of Naveen if he does not want to get his books of accounts audited? See, they are asking the question in a different way. They could have asked in this way that what would be the presumptive profit under section 44AD, but instead of asking it directly, they are asking it indirectly. How they are asking it? They are very smart. They are asking it, what is the amount of PGBP chargeable to tax in the hands of Naveen if he does not want to get his books of accounts audited? So we understand if assessee opts for presumptive income scheme, then he is not required to get the accounts audited. So indirectly, they are asking that what would be the PGBP income on presumptive basis? What would be the PGBP income on presumptive basis? See how they are cleverly asking the question. They could have asked in the simple way that what is the presumptive income under section 4480. But they are asking if the assessee does not want to get their accounts audited, what would be the income? Nothing but the presumptive income. We will tell them that we are more smart than you. Okay. So we got an idea of the 5 questions. First question was whether 44AD can be applied. First and 2 are almost the same question, but in question number 2, just one information is changed. So they are asking whether the assessee is eligible for 44AD or not. In question number 3, they are asking whether he is required to get the accounts audited or not. Here they are asking normal PGBP income. Here they are asking presumptive basis income. Okay, now we got a somewhat idea regarding the questions. Now it's time to read the case study. Okay. It says, Naveen, age 40 years, is engaged in manufacturing business. Got it? He follows mercantile system of accounting. Okay. And we understand if nothing is mentioned in the question, we always presume that assessee is following accrual basis mercantile system of accounting, right? But if the question specifically mentions that assessee is following cash basis, then we have to work accordingly. Otherwise, we always presume that assessee follows mercantile system. The details pertaining to his business for the year ending 31st March 2024 is as under. So the information for this year is given to us. Capital receipts 1.2 crore. Why they have given capital receipt? This is for section 44AB tax audit, because in tax audit we require both type of receipts, revenue receipts also and capital receipts also, and payments also, right? So capital receipt was 1.2 crores. Okay, turnover was 2.8 crores. So I can say that the turnover is nothing but revenue receipts. Can I write revenue receipts over here? So I can say that the total receipts is 1.2 plus 2.8, 4 crores. Okay. Amount received in cash out of turnover, okay, it is 8 lakh. So out of this turnover, this is the turnover, right? 2.8 crore. Out of this turnover, we have 8 lakh as the cash turnover. Got it? Amount received in cash out of capital receipts. Okay, out of this capital receipts, 2 lakh is cash receipts. Got it? Okay, fair enough. Amount received through account pay check, NEFT or other prescribed mode on or before the specified date mentioned under section 139(1). This is nothing but due date of ROI. Why they have given this amount? Why they are giving this amount, that this is the amount received through banking mode? See, they are telling us it is account pay check, it is NEFT, it is other prescribed mode. That is nothing but banking mode. And this is the amount which you have received up to the due date of ROI. Why they are giving us? So because we know that if we have to calculate the presumptive income, then we require that out of total turnover, how much is the amount which is received up to the due date. Correct? So this is 2.5 crore which is received up to the due date. So it will be helpful in our answering question number 5, because in question number 5 we have to calculate the amount of presumptive income. So this information will help in question number 5. Okay, so this is the advantage of reading the questions first. Now you will also save your time, and while reading the case study you will get to know that what is this information relevant for me, or is this information is not relevant for me, right? Okay, total payment is 1.6 crores. Cash payment out of the total payment is 9 lakh. It means that out of 160 lakh, I'm saying in lakhs, out of 160 lakh, 9 lakh is the cash payment. Got it? Net profit as per books of accounts is 10.5 lakh. Why they have given net profit as per books of accounts? Because in question number 4, they were asking to calculate the normal PGBP income. That is the reason they are giving us the net profit as per books of accounts. Fair enough. An analysis of the profit and loss for the year ended on 31st March 2024 revealed the following information. So they are giving some information also. 1, 2, 3. Okay, no problem. Salary includes wages of 15,000 per month, each paid to one security guard 2 housekeeping staff in cash. This is one of the favorite additional information by the examiner. They always use this information 48.3, that the assessee has paid something in cash of more than rupees 10,000 rupees. So here we know now that this salary includes 15,000 per month, which is paid to cash to each of these employees. How many of them are here? 1 security guard and 2 housekeeping staff. So how much we are paying in cash? Monthly we are paying 15,000 rupees per month each. That means to 3 employees we are paying 15,000 into 3. And for the entire year we must have paid into 12. How much is this amount? 15,000 into 3 into 12. So this is 12 months, right? So this is 5,40,000. So this we have to disallow. If you remember the section number, although it is not required to quote the section number, in fact this is MCQ, but still you should know the section number. This is 48.3. You understand? Cash payment in excess of 10,000 rupees in a single day is not allowed. So they are making a monthly salary payment, wages payment amounting rupees 15,000 per month to each of the employee, and there are 3 such employees. Okay, 1 security guard and 2 housekeeping staff. Point number 2. Other administrative expenses include 70,000 paid in cash. Again, now they are paying in cash more than 10,000 rupees. Something is more mentioned over here. Payment in a day is less than 8,000 rupees. Thank God. What they have done is, see, administrative expenses include 70,000 rupees. But this was not paid in a single day. We have paid 6,000, 7,000, sometimes 8,000, sometimes 7,500. It was never went up by 8,000 rupees. It was never more than 8,000 rupees. Right? Even if this would have been 10,000 rupees, we were okay with it. So was it a single payment? The answer is no. It includes 70,000, includes multiple payments on multiple occasions during the year, and we have never paid more than 8,000 rupees. So for this particular information, we are okay with that. We don't have to do anything, right? Because this is MCQ, so we don't have to quote any note or anything like that. But if this would have been the part of your total income question, let's say it's a part of your descriptive question, so you understand, if examiner is giving you certain information, you don't have to consider that information in your computation. I'm repeating, if examiner has given you certain information and you are not taking that information in your computation. Why? Because you have to ignore that. That is not relevant for our computation. You have to simply give a 1-line note that this information will not change our PGBP, because this 70,000 payment is made on multiple occasions and where none of the payment was more than 8,000 rupees. That's it. Simple 1 or 2 lines, simple lines, right? But here, since it is MCQ, so we can ignore. Third, interest charges includes interest payable on loan to Kamal for 70,000. So we have paid an interest to someone, Kamal. How much? 70,000 rupees, on which TDS has not been deducted. Loan was taken for the business purpose. So we understand, if you remember the section number is 40 small a. It says, if you are making a payment to non-resident or outside India on which TDS is required to be deducted, then we know that 100% is disallowed. But here nothing is mentioned about outside India or non-resident. So we always presume that we are making this payment to a resident. So if we are making a payment to the resident, then if TDS is required to be deducted, then 30% of that sum would be disallowed. So here, out of 70,000, 30%, that is 21,000 shall be disallowed, right? Provided the assessee was required to deduct TDS. See, assessee is an individual assessee. There is a little touch of TDS chapter also. See, assessee is an individual assessee, Naveen, right? Is individual required to deduct TDS? The answer is yes, if their turnover of the preceding year is more than 1 crore rupees of business or 50 lakh rupees of profession. So how much is the turnover? This is the current year turnover, right? This is previous year 23-24 year turnover was 2.8 crore. It was much more than 1 crore. But they have not given the last year turnover. Still we can presume, safely we can presume that if this year turnover is 2.8 crore, last year also turnover would have been more than 1 crore. So this person, we will assume that this person was eligible to deduct TDS. However, since he has not deducted the TDS, so we will disallow 30% of this amount. Okay, on this basis. So this is our case study. I think I can answer question number 4 now. See, question number 4 was, what is the PGBP income, normal provision? So let me answer that, because that can easily be answered right now. See, net profit as per P&L account is 10.5. And out of these three information, we don't have to take second. And this 540 would be disallowed. This 21,000 would be disallowed. So I can simply add 10.5 plus 540 disallowed expenses, 21,000 disallowed. So if I'll add everything, 10,50,000. This was easy, right? 540 plus 21,000. So it is giving me 16,11,000. Do we have this? 1611? Yes. So I believe you understood that. So should I write it over here, or you understood? I'm writing it over here. So see, net profit as per P&L account is 10.5. Net profit was, you don't have to write it in your MCQ, right? You can simply do, you can simply calculate this on your calculator itself. But yes, for the sake of understanding, for the sake of teaching you, that is the reason I'm writing it over here. So net profit as per P&L account was 1050, and cash payment was disallowed of 5,40,000, and TDS was not deducted. So 30% of that 21,000 has been disallowed. So it is giving me 1611. Right? Okay. Now come to question number 1. Question number 1 was asking whether the person is eligible for 44AD or not. So we understand for 44AD, one of the condition is that the turnover should not be more than 2 crores. Okay, let me see. What was the turnover? I think it was 2.8. Yes, it was 2.8 crores. See, 2 crore turnover he has already achieved. So this criteria is not here. So we have another, now 44AD has been amended, you know, and now we have already done the revision also now. So we know that 3 crore can also be applied. So anyways, it was not more than 3 crore. But for 3 crore, his in 44AD should I take cash receipts, cash payment, or only the turnover related figure? Only the turnover related figure. So I'll take, if the cash turnover is not more than 5%, then we are okay with it, of giving him the limit of 3 crore. And since we are giving them the limit of 3 crore and his actual turnover is 2.8, it will be allowed. So we can say that yes, 44AD you can take this option. But let us check the cash turnover. Only the turnover figure that we need. So for section 44AD, we just need turnover information. Right. So tell me, what is the total turnover? It was 280. Should I take 1.2 crore also? No, that was capital receipts. That was not related to turnover. Take only this turnover figure, 2.8 crores. This is in lakhs. So let me take it in lakhs, 280 lakhs. And how much it was cash turnover? It was 8 lakhs. So I can say cash turnover upon total turnover into 100. Cash turnover is 8 lakh upon 280 lakh into 100. Is it 5% or less than 5%? If it is the exact 5% also, then we are okay with it. It should not be more than 5%. 8 divided by 280%. It is much lower, 2.8 something, 5% something. So it is less than 5%. So we can safely give them a limit of 3 crore. And since their turnover is 2.8 crore, so we can say yes, your cash turnover is not going more than 5%. So you can easily take 44AD presumptive basis section. Okay, so the answer is no, this is not correct. No, this is not correct, because yes, he can take. And still we have two options. Yes. Okay, let me read the explanations. Since the aggregate cash receipts during the year do not exceed 5% of the total amount received. Second is, since the amount received in cash during the year do not exceed 5% of the turnover. What is the difference between the two? So here is the difference. Here it is total amount received, and here it is saying turnover. See, tell me, for 44AD, we check the total receipts or just the turnover? Just the turnover. So my answer is C. Got it? Yes, he can take it. And because why? And the correct explanation is because his cash turnover is not going more than 5%. We don't have to see the total amount received. We have to see just the turnover. Question number 2. What would be your answer? We have to give the same answer, but now the information has changed and we know that the additional amount received in cash is 10 lakh rupees. Okay, everything is same. Just the cash amount, initially it was 8 lakh, I believe, right? Yes, it was 8 lakh. They are saying now what would have been your answer if the addition, there is an additional cash received of turnover of 10 lakh rupees. So the total cash turnover will become 8 plus 10, 18. So in that case, our answer would be, I'm not writing it again, I'm just calculating the amount. So this would become 8 plus 10, 18 lakh divided by 280%. How much it is? 18 divided by 280%. It is 6.42 something. It is more than 5%. We will say no. Now you cannot take 44 AD presumptive section. Why? Because your cash turnover, your cash receipts of the turnover is exceeding 5%. Okay. So the answer is no, you cannot take. But again, we have no, 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 no. All these are saying no. Let me check. First of all, tell me, we should give him a turnover of 3 crore now, or we should give him a turnover of 2 crore limit, 2 crore limit, because 3 crore limit is only for those person whose cash transaction is up to 5%. Since his cash transaction is more, so the turnover limit is applicable to Naveen would be 2 crores only. And since his turnover is more than 2 crore, that is the reason he cannot take this presumptive scheme. Okay, so it says no. Since turnover of Naveen exceeds the threshold limit of 2 crore, answer is yes, because his turnover is, because now we will not give him 3 crore. We can only give him 2 crore limit. And since his turnover is 2.8, which is much more than 2 crores, so we are not going to give him 4480. This is the correct answer. Let me read other answers also. No, since the aggregate cash received during the year exceeds 5% of the turnover. This is also correct. Why? Because the cash receipts exceeds 5%, his cash turnover is more than 5%. This is also correct answer. Okay. No as the cash payment. No, we don't see cash payment in 44 AD. C is incorrect. D says no due to both A and B. This is the correct answer because A and B are correct. That is the reason it is covered by D. So D is the correct answer. Getting it? Very conceptual question. Interesting also. Okay, third one. And then please remember in question number 3 also we have to take the cash turnover 8 plus 10 because there here they have mentioned that for the purpose of this MCQ and MCQ 3 we have to take additional 10 lakh as the cash turnover. So it will become 8 plus 10, 18. Third, is Naveen required to get his books of accounts audited during the previous year 23-24? So we understand for audit we have section 44AB, and in 44AB we see cash receipts also and cash payment also. See 44AB, first of all, it says generally it says your turnover should not be more than 1 crore, but here my turnover is 2.8 crore, so 1 crore limit would not be applicable, right? So now we have to check whether this 10 crore benefit can be available to this assessee or not. So 10 crore benefit would only be available if this person satisfied that condition. Your total cash receipts, your total cash payments should not be, both of them should not be more than 5%. Both of them should not be. If any of the condition, either the receipts or the payments goes beyond 5%, then sorry, 10 crore limit would not be applicable to him. And since his turnover is more than 1 crore, then we can say safely that 44AB would be applicable in that case because he has to get the accounts audited due to 1 crore limit. But let us check whether 10 crore limit can be given to him or not. Let me check it. Okay, I'm writing it over here. See, for 44AB, we have to see your cash receipts also as well as your cash payments also. Getting it? Right. So tell me how much is the cash receipts? Cash receipts, and do we need to take just the revenue receipts or the capital receipts also? Capital receipts also. So 8 lakh, and for the purpose of question number 3, they were saying that please include 10 lakh also. Okay. So 8 plus 10, 18 is the revenue receipts and 2 lakh is the capital receipts. So 18 plus 2 is 20 lakh. So the cash receipts is 20 lakh out of total receipts. Total receipts is how much? 1.2, 2.8, 120, 280, 400. Calculate the percentage, how much it would be? 5%. So cash receipts is okay. We are not going beyond 5. It is just cut to cut. We are coming at 5. So cash receipts, this got satisfied. Let me check about the payments also. Payment is how much? The total payment is 160 lakh, 1.6 crore, 160 lakh. And cash payment is 9 lakh. Okay, 9 divided by 160. Tell me the percentages. 9 divided by 160%. How much it is? I think it's more. It is 5.625%. So this condition is not satisfied. So 10 crore limit we cannot give it. Yes, this person to him. So we can only give 1 crore limit, and since his turnover is exceeding 1 crore, so this person would be required to get the accounts audited. Okay. So to answer this question, is Naveen required to get his books of accounts audited? Yes. Why? Because his payment was increased because he has his cash payment which is more than 5%. The answer is yes, but here we have two yes. Since the amount received in cash, no, cash received was not a problem. Cash payment was the problem. So C is the correct answer. Yes, since cash payment during the year exceeds 5%. Got it? Okay, fourth we have already done. Fifth, what is the amount of PGBP as per presumptive basis? Okay, so we understand. Tell me how much is how we will calculate the presumptive income. So first of all, we should know how much is the total turnover. So we know the total turnover is 280 lakh. Okay, 280 lakh is the total turnover. And out of it, we have to divide this into two parts. First of all, whatever is received up to the due date of ROI, and it should be through banking mode. So tell me, and I think it was already given in the question directly, it was given 250, 2.5 crore means 250 lakh. So I can easily calculate now. So 250 lakh was received up to the due date of ROI, that too through banking mode. And whatever is the balancing figure, you can keep it here 30 lakh. Out of 2.8 crore, 2.5, 30 lakh. So how you will do? Now it's quite simple. Apply 6% on it and apply 8% on it. So 250 into 6% would be 15 lakh. And this would be, I believe this is 2.4, right? So if you total sum it up, it would be 17.4 lakh. Yes, it is. A answer. Got it? So this was a bit conceptual case study, and I believe that you are able to revise your sections, important section 44AB also and 44AD also. With that, let's meet in next video. Till then, take care, bye-bye, and keep learning and be consistent. Your exams are approaching. I would like you to be consistent. Don't take any pressure. See, it's very normal to take pressure because I understand it's now just 10, 11 days which are left for examinations. But still, I would say, please stick to your schedule. Stick to your schedule. Believe in yourself. Just be consistent. Keep on learning. Keep on learning, and also take breaks at frequent interval of time. It should not be like that you are at a stretch, you are just sitting on your chair and table for 4 or 5 hours and you are not taking the break. After every 2 hours, please take a 10 minutes break, go out, have some fresh air, then come back and read, right? You will easily pass, but just believe in yourself. It might be possible also that your course there might be some students whose course was not 100% complete. Even if it is, I would say 85% complete, even it is okay. Up to 75% also, I would say it's completely okay. Just keep on revising those things. Keep on revising those things. I am telling you, the syllabus is hard, but the paper will not be that much hard, right? So we'll meet in our next lecture. Till then, thank you so much. Bye-bye and take care.